Want to learn the essential life and health insurance topics quickly? This slides guide is packed with high-priority points to help you study smarter, not longer. Now, let's dive into disability income insurance. Slide 1. Purpose of disability income insurance. Disability income insurance provides monthly income to an insured individual if they become disabled due to an accident or sickness. Now,
this type of insurance is
private
essential
insurance
because a
plans
total
for seniors.
disability can have a greater financial
Now,
impact
let's dive
than
into
death,
health insurance
as it
policy
prevents
provisions.
ongoing earnings while the individual
Now,
still
let's
has
dive
living
into
expenses.
underwriting and policy issue.
Disability insurance is
Now,
available
let's
both
dive
as
into
individual
California
policies
laws and rules
and as group policies through employers.
Now,
The
let's
most
dive
common
into
type
medical
of individual
expense
policy
insurance.
is the guaranteed renewable policy, which allows annual premium adjustments and typically covers non-occupational injuries or illnesses. One important consideration is why someone might purchase disability insurance even if they already have life insurance. Life insurance provides a lump sum at death, but it does not replace the regular income lost during a disability. For example, if a teacher is injured in an accident and cannot work, a disability income policy would provide monthly payments while they recover. Slide 2. Disability income benefits. Monthly disability benefits are generally based on the insured's pre-disability income. The benefit amount may be a percentage of earnings or a flat dollar amount, depending on the policy. Group long-term disability plans often cap benefits at around 60% of the employee's income. In the event that the insured dies while disabled, any unpaid benefits may be paid to the estate. For example, if an individual earns $5,000 per month and becomes disabled, a policy that covers 60% of income would pay $3,000 per month during the period of disability. Slide 3. Definitions of disability. The determination of total disability depends on the specific definition used in the policy, taking into account the insured's education, training, and experience. There are two primary definitions: own occupation and any occupation. Own occupation policies provide benefits if the insured cannot perform their current job and tend to be more expensive, offering stronger protection for the insured. Any occupation policies provide benefits only if the insured cannot perform any job for which they are reasonably suited by education or experience. Presumptive disability is a provision that guarantees automatic benefits for severe conditions, such as blindness, deafness, or the loss of two or more limbs. Partial disability occurs when the insured can perform some work but not their full duties, allowing for partial benefits. For example, if an individual cannot lift heavy objects but can complete other tasks, they would generally qualify as partially disabled under most policies. Slide 4. Partial disability benefits. Partial disability benefits may be provided in different ways. A flat amount benefit pays a predetermined portion, often 50%, of the total disability benefit. For instance, if Helen is able to work part-time after an injury, she may receive half of her full disability benefit. Alternatively, residual or proportional benefits are based on the actual income lost due to partial disability. If someone normally washes 10 cars per day but can only wash 6 due to a disability, resulting in a 40% income loss, they would receive 40% of the full disability benefit. Slide 5. Rehabilitation and cause of disability. Disability income policies often include rehabilitation benefits that cover vocational training or retraining to help the insured return to work, possibly in a new occupation. The cause of the disability is also relevant. Policies may define accidental means, requiring that the injury itself be unexpected or accidental results, which require only that the outcome be accidental, making this provision less restrictive and more common. For example, an injury from an intentional cliff dive would not be covered under accidental means but could be covered under accidental results. Slide 6. Key policy provisions. Policies include several critical provisions. A probationary period at the start of the policy, often 15 to 30 days, prevents claims for pre-existing conditions. The elimination or waiting period defines the time after the onset of disability before benefits are paid, and longer periods usually result in lower premiums. The benefit period specifies the maximum length of time benefits are paid, which may range from short-term periods of 6 months to 2 years, to long-term coverage lasting 5
10, or even 20 years. Delayed disability provisions allow benefits if a disability occurs some time after an accident, while recurrent disability provisions permit continuation of benefits if the disability returns within a specified timeframe without starting a new elimination period. Policies may adjust benefits if the insured changes occupations, reducing benefits for more hazardous jobs and increasing for less hazardous work. Some short-term policies offer elective indemnity, providing an optional lump sum benefit. Slide 7. Non-disabling injury and coverage past age 65. Non-disabling injury coverage pays medical expenses even if the injury does not qualify for income benefits. Coverage beyond age 65 typically requires the insured to be actively working a specified number of hours per week. For instance, if an individual is injured but can still work, the policy may cover medical expenses without paying income benefits. Slide 8. Disability income policy riders. Disability income policies often include optional riders that enhance coverage. The waiver of premium rider allows premiums to be waived during total disability, usually until age 60 to 65. Some life insurance policies include disability benefits, paying a percentage of the policy's face amount each month. A Social Security rider can supplement income if Social Security benefits are delayed or denied. Cost of living adjustment riders increase benefits annually according to changes in the Consumer Price Index. Guaranteed insurability riders allow the policyholder to purchase additional coverage later without proof of insurability. Exclusion riders remove coverage for certain diseases or body parts. Knowing the purpose and effect of these riders is important for exam preparation. Slide 9. Must-know exam summary. For exam purposes, the 10 most important points are: understanding the purpose of disability income insurance as a replacement for monthly income, knowing the difference between own occupation and any occupation definitions, recognizing presumptive disability and automatic benefits, distinguishing flat versus residual partial disability benefits, understanding rehabilitation benefits for vocational training, knowing elimination and benefit periods, understanding the difference between accidental means and accidental results provisions, and being familiar with key riders such as waiver of premium, cost of living adjustment, Social Security, guaranteed insurability, and exclusion riders.